While global markets continue to reel from still more evidence of a slowdown in growth after the U.S. reported its most lethargic home sales levels in 15 years, and that set investors here in Asia searching for safe ground. One of the main reasons why the yen has advanced almost 10% so far this year. Take a look at dollar yen, certainly retreating from yesterday's levels. Remember, crossed into the 83 territory, currently sitting at 84.54, and also in against the euro, it has moved down to 107. Where were we yesterday? It hit 105.44. And of course, let's get more thoughts on where the yen is going to head from Mario Singh, who is our guest host. You know, Mario, of course, everybody's looking out for what could be the line in the sand. But given the experience that the Japanese have had in 2004, and that was considered a massive failure because it let investors go massively short. Do you think what will be a successful strategy as we continue to get steady comments?
Well, I think at this point, what is most important is that when the governors in Japan, they're looking at depressed levels now at about 83. One of the biggest concerns at this point for them is really got to be the corporates, because they are primarily an export-driven society. But at this point, at 80, the line in the sand for me is at 80. Why won't they come in to intervene now at this point? They know because of that experience.
Getting some interesting flashes citing various sources saying Japanese officials think that the Europeans and the Americans are okay with a Japanese intervention. We've been hearing so many innuendos all day, all week. We might as well become Japanese press officers by now. I mean, what are they trying to tell us? I mean, you keep on crying wolf, and is it going to happen? Markets just shrug off.
Japan knows at this point, for them to have a sustainable effect in terms of their intervention, Euro and the US got to come in and help them in terms of the intervention. Why won't US and Europe come in now to help them in terms of selling the yen? Well, in the Forex market where it's concerned, for them to actually assist in that sell-off, they've got to buy up their own currencies. Now, why would the US and Europe at this point buy up their own currencies? They've got to maintain loose monetary policies for them to help expand up all their unemployment, which is at real depressed levels. So at this point, I don't think they're going to assist. They won't be really okay, or they will be okay if Japan actually helps them in their own intervention by themselves. But really, for me at this point, as a trader, I'm looking at 80 because what is the most concern now in terms of Japan? When it drops below 80, it can drop all the way down because the lowest that they've ever had was at 79, 75, and we are just a tad close to that all-time 15-year level.
Nicole?
Yeah, and Mario, speaking of the United States jumping in, are you factoring QE into coming out of Ben Bernanke's mouth on Friday as you're looking at this moving forward?
Well, he's been really a master in terms of masking his words. So Friday is really going to be D-Day for everyone to be watching what exactly is the Q that he's going to be talking about. At this point, I don't think they're going to be expanding their balance sheet. But in terms of what we saw about 2 to 3 weeks ago when they were reinvesting their principal payments on mortgage assets, that was a slow bazooka hit in terms of the ammunition they're putting on the table. If on Friday they come out and literally were to expand their balance sheet, that is going to be a cue for every single person to take a look and say, hey, it might be a point where we could seriously start considering that double dip.
All right, Mario, just hang on a second. We're getting some flashes from Australia. It looks like Australia's Prime Minister saying they will provide policy briefings to independents. Of course, the comments come amid continuing political uncertainty over who is going to govern the state. Additional flashes suggesting, coming from the Prime Minister, saying offers briefings with NBM company CEO, will provide proposals for parliamentary reform on Monday, and that she is prepared to agree with independent state for a 2013 election. Of course, on the back of this announcement, we see the Aussie dollar gaining quite a bit of traction, moving to the upside by 0.8%, currently at 4 eighths that you see there, 88.86 against the U.S. dollar. Of course, the markets were under pressure today, especially as there were proposals on the table for yet another resources tax as Australia just tries to decide who is going to govern the country. Now, we've been talking about this political uncertainty, even though the China export picture is the bigger growth story, and yet it looks like the markets are reacting, and it looks like there could be some changes on the horizon. How do you read these developments down under?
I'm looking at the Aussie now, and you saw that heading up. Now it was a small hit up, about less than 50 pips in my book. So traders are watching those levels. In fact, the next few days until the votes are counted in terms of the stalemate between Gillard and Abbott. I think, at my views, what I'm looking at the markets, my bet is actually on Abbott at this point. Because the whole Aussie, the country, they don't really like the mining tax that's being slapped on. And Abbott has come out and said, look, I think I'm going to scrap the whole mining tax. He's got a big political reason why he wants to push that through. So traders will not be taking any position, at least on the Aussie, until and unless those figures come out and to see someone gain at least a majority of 76 seats.
Right, and what a bad political gamble for Labour, given that they had to let the previous Prime Minister go and they brought in Gillard. And where are we now talking about a new party? Well, yeah, thanks so much for that.